What's happening, guys? Another Sunday scan coming at you this time for June 7th and the week ahead. I think the key takeaway for last week, the week ahead, and just the rest of your trading career is that the market can stay irrational longer than you can remain solvent. And I think it's super important to understand that. I wanted to hit upon that before we get into the key topics for this week, but look at AMC. I mean, AMC did something that I never even imagined was possible. Yeah, it would make sense if it was lower float and, not such a big outstanding share base, but I never would have imagined that this could happen. And just like we talked about last week, there was a little bit of bias that I had, just this doubt that, how much higher can it go? And by all means, it went way further than I would have ever expected. Once it started to go, it came right into those key price levels, key price ranges that maybe you would expect out of a lower float type name. But it was still a period of time where I had to adapt and throw away all of my bias to really start to get a good grip here. So I think we've seen it all at this point, and all that matters is what's next, right? We've always said Kodak, once in a lifetime opportunity. Then all of a sudden something else happens. Then all of a sudden AMC happens. So what's next? We're just going to have to wait and see and just always know that there's always going to be something that is bigger and better and crazier. And you know what? The market euphoria at this point is insane. So last week I told you a little bit about, the kind of the next mentality. I made some mistakes. I made some mistakes the week before, overstaying, having that bias get in the way of the trades. Not that they were bad entries. I had phenomenal entries. I had phenomenal exits, but it was keeping that core, keeping that bias, and these markets remaining irrational longer than I would anticipate. The key for me, the key for you, the key for everybody is to remain solvent, right? No matter how big you are, no matter how much money you have, if you get on the wrong side of a trade like that, that could be your career, right? If you don't have proper risk management, if you don't know where to stop, if you don't have a stopping point. So it brings me to, one of those points that I made probably a year or two ago, and something where I had suggested if you're having trouble where, you have a month of great trades and you give it all back, or a year of all great trades, then you give it back, whatever that case may be, look at all your big losses. What's your biggest loss? And what's your average losses? And there's going to be a number that says, you know what, every time my loss gets bigger than X, it balloons, right? So you should always just have the auto shut off. And I had done that for quite some time. And you know what? It would have helped me in a situation like last week where maybe I just get blown out at a particular number. 100 grand, whatever. It might save me a couple $100 grand. But, that could be 5 grand for you and it'll save you 20 grand. It could be 50 grand and it'll save you a couple $100 grand. Whatever that number may be, what you typically draw down. And if it's something that's above that, and you typically exponentially turn that into, some silly loss, that should be your number, because you're rarely there, and when you do get there, you make bad decisions. So it's a good reminder to always have that, stop on your account, or, look, you should have good risk management. You should be able to do that yourself, but we're all human. We all make mistakes. And at least you have this safety net that says, you know what? Nope. You're here. You shouldn't be here. You didn't respect your risk. You're out. And then that way you don't have that emotional choice to make, that emotional attachment. And I think that it will preserve capital for a lot of people for a very long time. There's going to be times where you might stop and you say, you know what? I'm pissed that I had that on my account. I'm pissed that, it stopped me out. I would have made money. But the time that you don't stop, you would have taken all that away. So keep that in mind. That was a big game changer when I started to really level up in play. Just because I kept on running into these situations where I'd get stubborn. And that was the easy fix for me. And you have to understand what your weaknesses are. You know, I am very good at sizing in. I am very good at taking profits. I am very good at scaling when I should. But those times, and it's rare, but those times where I get a little stubborn, you know, that's where things start to kick up a notch. And, you know, I could always use that little, you know, slap, like get out. And that's exactly where it has helped me in the past. So, let's see. All about capital preservation, and you know, weeks like last week, this prior week before that, you know, they kind of bring out any cracks that you have in the foundation. We've talked about that, right? And each time you have a little bit of a hiccup, you hit a speed bump, whatever it may be, it makes you a better trader, right? But you're always going to come to these levels and you're going to hit some type of speed bump and wonder, okay, you know, do I still have what it takes? Can I do this? Can I do this for a real career? And, you know, I've had this conversation with lots of people, and there just comes all this doubt. But you can always go back to these types of crazy P&L swings, weeks, gains, losses, whatever it may be. And it was that defining moment to really build your new base to the next, you know, launch. It's kind of like a new launch pad for that next level. And you'll realize that each time you experience this, you start to become less emotional about the P&L swings, less emotional about the trades, and it's part of your growth as a trader. So the key is just being able to learn from it and, you know, not just kind of have all these different excuses of why it happened and push the blame out all these different directions. No, it's nobody else's fault except your own. And you can pinpoint those times, and there's probably 5, 6, 10, 20 times where you're like, you know what, I should probably not be in this trade. I don't feel comfortable in this trade. I should probably be stopping out. Let's see what it does. Famous last words. So anyway, I wanted to hit upon that. And you know, like I said, you know, you only need to get rich once in this market, right? And in this career. And it's all about keeping it. So there's 2 important points there. One is you only need to get rich once, right? So trades like AMC on Thursday, that was probably the biggest opportunity I've ever seen in my life, you know, beyond Kodak, right? And so, you know, if you were there, if you were prepared, if you hadn't exhausted yourself in the prior days, you know, you were able to capitalize on that. And a lot of people had career days, right? So that might be your one trade that levels you up. You get to the next level. You come from a, you know, I'd like to do this. You know, it'd be cool if I was a day trader full time, to I can be, right? And then the second part of that, and I think most important, is that if you did have a great trade, even if you didn't, somebody always makes more. Always remember that. You're going to be so fired up about a good trade that you make, and you're going to talk to your other buddy and realize that he made 10 times more, or 2 times more, 5 times, whatever the case may be. But if you didn't have that outlier influence, you would be happy, right? So you always need to just focus on you, what you could have done better, how you could have performed better, what maybe you could have done better risk-wise, what you could have been doing better scaling in-wise, and how do you better that trade so that for the next time, it can be that next level type trade. That's what's more important than not feeling good about yourself, not crushing it, but seeing that your other buddy made a whole bunch more. So keep that in mind. Somebody is always going to make more, and if you're always kind of comparing, you're never going to be happy. And when you take those outlier influences out, you know, you realize how far you've come. Look back and give yourself the credit for having a consistent process. Look back over the last 6 months, 12 months, how far you've come, and give yourself the credit. Because it's so easy not to do it and not think you're doing well enough because somebody else is making more. So keep that in mind. All right, so for the video note for today, a couple things to go over, a couple housekeeping. First and foremost, I'm wearing my Scans shirt. That means that we're giving away Scans. Scans is the tool that I use, and you know, this is where I get a lot of different screens, scans that pull up stocks that are either breaking out, breaking down, or they hit certain parameters, things that I care about, and you can do whatever you want. Tell it to give you whatever you want. They also have news, among many other things. But this is something that I use each and every single day. You guys see it on the broadcast. And last one always comments on these. You won the scans for this month, as well as Mike Duraco will be sending you a shirt as well. Remember, all you guys got to do, like the video and leave a key takeaway. If you leave a key takeaway, you put the timestamp for the key takeaway. So if it was 11 minutes and 3 seconds, you just type that in, and YouTube will automatically make a little link to that key takeaway. Somebody else can click it and hear your key takeaway. And the cool part about that is it may be an aha moment for them, which they might have skipped over the first time. So I would encourage you guys to all do that. And as you guys know, I love to give away a bunch of stuff. So that's gonna be the winners for this week. So weekend review. I have a bullet point here. Time to focus, right? So I first did this scan, and there was probably 30 names that I would actually be interested in. And I think that the most important part of getting prepared is just understanding where they fit in the category, right? There's particular types of trade setups. And every single time you prepare for a trade, you should understand what type of trade that is. Whether it's some type of breakout trade and you know that you would be buying dips versus a particular risk level. Whether it's failed follow through momentum, where it's a particular setup that you're looking for key levels to break and confirm. And when I say confirm, a lot of people get confused by that. I'm referring to a price level that was holding that doesn't just break, right? Everybody's like, okay, it broke, I'm gonna get short. It's not how it works, because a lot of times you'll see it break, come right back up, right? So what we need to see is break, come back, exhaust a few times, fail, lower highs, and start to dribble off. If you're always attacking it as soon as it breaks, a lot of times that's where the trap is. And you've got to be cautious in this market because you see that every single day. So I want to be super aware of what category the trade fits in. And when you have that category, you might be able to have all these different tickers that you're familiar with, right? So I always have the staying familiar section. So come tomorrow in the market, let's just call it the meme sector, right? You've got AMC, you've got GME. I don't really like to trade GME. AMC I might trade, but I actually use AMC as an index. Just like a lot of people look at the SPY to get a grip on, how to trade other names. I look at AMC to determine how to trade BB, WKHS, even maybe RKT, SKT, maybe even Tilray. A lot of them have nothing to do with one another, but it doesn't matter because right now it's about the meme index. It's about the Reddit names. It's about the ones that are socially juiced, out there on the networks. And that's all that matters. And the secret, the key, the cheat sheet, if you will, is watching AMC, because that is the sort of the euphoria index, right? You can think about it as like a little speedometer almost, right? And it goes up. How crazy is it right now? How euphoric is it right now? And obviously AMC at 65.70, it's pushing the scale. So you want to be cautious on the short side on things like BB and WKHS. But as it comes down and AMC is unwinding, the imagination of traders thinking that BB is going to go to 20 or 30 or 50 and all these different ideas is also going to come down as well, right? It's all about the imagination. And when there's a crazy imagination, you get moves like pets. Pets went from what, 30 to 40, no, I think 20 to 35 bucks, 40 bucks, I don't even remember. There was just so many movers last week. But it's all about AMC and all those names that surround it. So It always comes back to a category and having a reason for the trade, right? If it's a particular type of setup, you know what to do. If you can't put it into a category, then how do you know how to prepare for that trade? How do you know how to trade it? You don't. So therefore, you don't have a trade. One thing to be cautious on. A lot of times, when the tide changes, right? AMC. The biggest move comes after the big move, right? And just be cautious of that. You've been waiting and waiting and waiting and waiting, not so much in everybody's case, including mine, to short. But if you've been waiting for that short and it finally comes, why all of a sudden do you think it's a good idea to play the bounce, right? Be cautious flipping the bias, trying to trade the bounce. Say you missed that short, or say you didn't capitalize on it as much as you would have liked to. Be cautious flipping the bias. Oh, you know what? I missed the short. Would have been nice, but you know what? I'll play the bounce. No biggie. I'll play the bounce. All of a sudden, you're $5, $6 in the hole, right? You've been waiting for months for this thing to break down, to stop squeezing, and it finally does, and all of a sudden, it's a good idea to go long. No, it doesn't make sense. Be cautious. It's fine to trade, bounce longs after there's some type of washout, some type of crazy move, but just be cautious thinking that, well, this thing has to bounce, doesn't it? It's no different than you thinking that it had to pull back and it didn't. So be cautious. There's so much range right now, you can wait for things to turn. Wait for things to turn, and there's your edge, rather than trying to find the top, because you're going to get exhausted. Let's see. The last comment that I had for today was a goal. I have mentioned it before, but switching biases in order to get long into short into long. Not so much on AMC, because I just talked about that, but something like BB, where it goes from 16 or 20 to 16 to 13, and I know to cover, but I don't flip it to the long side, and then it rolls back up, for $3 per share. I could do a lot better with that, flipping the bias. But the biggest thing right now is for me anyway, I got into this, and this is also why I had a little bit of trouble 2 weeks ago, is because I am super patient. I'm good at letting the trades work for me. But we're in a trader's market where the trend is continually changing. You might be dead right for a little while, and then it reverses the other way. And then it's perfect for a little while, and then it reverses the other way. And it's just making moves that are way bigger than you typically see, right? So BB, for example, that bounce off the lows is $3. That pullback off the highs is $4 per share. So if you're on the wrong side with too many shares, that adds up extremely fast. So just be super cautious with that. I think that is about it for what I had prepared for. I did have one other note, forced tape. Forced tape, anybody that's in the room, I would encourage you guys to go back through and watch the BBIG commentary if you guys recorded it. I compared it to OEG. And OEG was like that forced move into the close, but they actually caught shorts and it squeezed out. The next day, nobody was home. The next day, it just completely unwound. And so I think that if you go back through the chat logs on BBIG, and for those of you guys that were recording it, I had suggested in the lounge to record it because this is some really good tape to learn on. But go back and read the commentary and review how that traded and see just how forced it was, and then once they moved on, they moved on. I think you can learn a lot from that. And this is about seeing this stuff over and over and over again. You have an example of OEG that did not work intraday because the move happened too late. It happened after 3:30 p.m. Started to ramp up towards the highs. And there wasn't that much time left in the day for it to pull back. On the other hand, BBIG, the point that I made in the room was it was premature. Premature end of day move. We talk about that on Tandem Trader, textbook trading, and it literally was a textbook premature end of day breakout. They squeezed up almost to the prior high, the second move, exhausted everybody out that didn't cover the first time, unloaded their position, and let the bid drop. And it was a great way to end the week. So I am hopeful that we can pick up where we left off and have a lot of great opportunities, because a lot of people ask me, you still think we're in the third or the fourth inning? And, look, we had a little bit of a market pullback a couple weeks ago, but look at the momentum. Look what's happening. You've seen AMC, something we've never seen happen before. The market and the momentum is not going anywhere. You just have to adapt. It doesn't matter what you think. It doesn't matter what I think. We just need to get to the middle, right? There's a lot of meat. There's a lot of meat out there. If you try to get the whole thing, if you try to force it, you're not going to get any. Take a little bit of the meat and move on. And right now, that's working extremely well. So let's get right back into the scan for the week ahead. All right, guys, so this is the second part of the scan. This is where I get prepared and post the ideas, thoughts, and basically what's on my radar for the week ahead. I am not a registered advisor. These are not buy or sell recommendations. This is for informational and educational purposes only. So if that is not something that you're interested in, if you're looking for buy or sell recommendations, you're in the wrong spot. If you're looking to learn and kind of see what I'm looking for and sort of how I prepare for the week ahead, then you're in the right spot. RBLX. RBLX has been on a fantastic breakout. It's one of the craziest IPOs that's kind of not given too many headaches. It just kind of consolidated. It had this one big breakout day, and from that point forward, shorts were kind of, probably stuck. It's had a nice breakout. Friday was a great example of kind of retesting that high, exhausting people through the prior high, and then walking, and letting it fade back. So I'm not here trying to suggest that it's going to fade off, that it's topped. It could easily go 120, 130, 150. I don't know. But what I'm going to be watching for is for some type of failed follow-through momentum. Typically, I would look for it to maybe retest back up towards the 100s, 150s. This prior top over here, you can see that it had a little bit of support, which may become the resistance right over here and here. And if so, then I'd be looking to fade it back down. One note that you can kind of pull from this move on Friday. I always try to go back and look at what I could have improved on or a trade that I could have taken. It's in hindsight. It's not a trade that I took. But you can see that they exhausted everybody through the prior highs, came back, retested, failed, came back, retested, failed. And again, as you guys know, just because it fails at particular levels does not mean it's auto short. What I want to see is failed follow through momentum, lower highs, confirmation. I'd rather be shorting lower than have the best average but the most exposure, if that makes sense. So you can see we've got a lower high here, comes back, it starts to bounce like a basketball on the VWAP level. And so we talk about that on Tandem Trader, the basketball analogy. And you can see that this is pretty much the floor. And as soon as the dribble stops, it unwinds. But you can see failed follow through momentum, failed follow through, good confirmation sub VWAP. Great trade. I missed it, but that's what I'd be looking for. So again, I'd be looking for it to come back up, retest what was support, is now resistance. Ideally push out through there, just like we saw right over here. And then possibly some profit taking, but we'll see. Again, I'm not looking to step in front of it. I'm just looking to trade that 3 to 5 or maybe like $5 to $8 per share type of trade. So again, higher the better, failed follow through versus VWAP. One other one that I missed that is exciting is UPST. So UPST on the daily had this huge breakout over this prior high, 160, 164, we'll call it 165, was pretty much the top. I know this day it was what, 160, yeah, I guess it was, 165.66. So it's been kind of peaking out the last three attempts over the last couple weeks. And they finally busted it through, which brings out the emotions, brings out all those people that were using that prior top as their resistance point, their stopping point. blew everybody out, and then right back under. That's a great trade. Unfortunately, I missed it. Obviously, there was a few other names moving, BB, AMC, WKHS, and all these other names. But with that said, another great setup, blows out. You've got the failed follow through. You've got the same setup right here, right? It's not a VWAP setup, but it's the same basketball analogy that we talked about. So I love seeing this type of setup with a base that it's forming. And, sure, maybe you take this as a trade, but you can see that it comes back up. This prior base becomes the resistance, and then you've got that nice, again, basketball analogy against the VWAP, and then the big unwind. This is a $30 per share fade. This particular one was about 20, 25, and if you include it up here, it's about 30 from the highs. Not suggesting that I would have held, not suggesting that I traded it, not suggesting that I wouldn't have sized down into any of this flush or covered it early. But the point is focusing and zoning in on the ones that have the best bang for the buck. And $30 per share is pretty crazy. So I always like to watch these stocks that are going straight up, straight up, straight up, straight up, flirting with this 52-week high breakout, blow out all the stops, and then sit back. And it was a fantastic opportunity. So we'll see what happens, but I'd love to see another kind of retest. And again, sticking with the same theme, I'd like to see it come back up towards the 168s, maybe blow through that a little bit versus the 170s, and then fade off. And I think we'll have a trade opportunity. I'd be looking to trade that as well. BBIG, higher the better. This is a perfect example. We were talking about this before. I talked about it in Traders Lounge and in the room. You guys saw the tweets that I put out there as far as pushing, stuff move, failed follow through, and unwind. Great opportunity, and the key levels were just so clutch. You can see the 480s was sort of the base over here. They flushed out, and then you can see that it was pretty much the base right over here. Once they gave way, that was scaling all day for me. And once that tide turns, you're going to have all these dip buyers kind of buying that premature move. It failed. So all these dip buyers, once it breaks trend, dip buyers become pop sellers, right? So that was the home run trade for the close. And ideally, we come back up towards this VWAP level, retest this prior level of resistance. 440s, 450s would be ideal. Exhaust out, and then fade back maybe to the 380s. After that, I don't really care about it. I like to take advantage of those big emotion-filled trades and then move on. The euphoric kind of peak craziness, and then move on. F was great. Again, zoom out, right? We're looking at the 1 minute intraday. But you can see that we're forming a very nice big breakout. So I don't want to sit here and think that it has to pull back. I'd love it to. It very well can. But it would need to prove. So the key here, let it prove. This is a slow mover, and it likes to trend. So I'm going to wait for it to prove what way it wants to go. There was an opportunity given the big gap up. As you guys saw, I was short pre-market, and once again, you should start to see, this is the third one in the last 4 names of the same setup, the same concept over and over and over again. Where's the base? Failed follow through, basketball analogy on the Tandem Trader educational material that we have. Unwind. VWAP obviously proved as resistance points and continued to fade throughout the day. On a move like this, you can't expect that it's going to just flush and go, straight down. This is a big name, big market, big volume. So anytime that it does have fast flushes, they are better covers than, I'm just going to sit here and wait and see if it goes lower. No. These types of trades, when there's a huge market, just like BB and some of these other ones, when there's that outlier flush, a lot of times it's great covers. So I did not put AMC, I did not put BB and WKHS on the main Radar, I didn't want to clog this thing up with a ton of trades. These are all going to be watches for me and likely would trade them. But it's going to we got to see what happens, right? Our Monday, are we gapping down huge? Is AMC at 38 on Monday or is it at 50, right? And based on that, we're going to see what happens with WKHS and BB and all the rest. So I don't want to get bogged down on too many names, but those are all secondary watches for sure. GTT has been a great profit center. The last 2 days, shorted the parabolic move, let it exhaust out, size into the backside on Thursday, and then shorted the strength on Monday, which turned out to be a perfect unwind. At this point, be cautious trading the same size that you traded the prior days. It's going to trade thinner. You can see the huge volume. The days that it has huge volume allows you to kind of get in there with a lot more size than you typically would trade. But you have to recognize when the volume is not the same. Otherwise, you're going to have too much size and really get clipped. So be aware of that, but higher the better, and hopefully it's just that slow trickle down effect that we see all the time. EXPR, GME, AMC. You know, as long as the meme names are kind of just chilling and fading off and not doing too much, this one likely does as well. FSR notably strong. So fantastic trade, came prepared opportunity. On Friday I was short, and you can kind of see we gapped up and we pretty much came right into that resistance from the prior days, and then flushed out. Came back, held VWAP, continued to trickle up. When that happens, I don't want to fight it. Came all the way back up and held pretty well compared to all the other names that had been trending. So I want to be aware of it. It doesn't mean just jump in front of it. It's easy to jump in front of it and get squeezed. So let it squeeze everybody else out and then pick up the pieces when it's time. PLTR was fantastic. This is going to be a great trade. I want to stay familiar with it. It's got great volume. It's been straight up. So as it continues to go, we're either going to get that $2 breakout towards the daily VWAP, or we're just going to hit a wall and fade off. And it was a great trade on Friday. It offered a great setup. And, hopefully we have something ready to trade on Monday. It's not as sexy as some of the other names that have this huge range. But what I like about this is the liquidity. You can really scale into some good size. And, as much as this does not look like much, this 30, 40, 50 cent move, it was a pretty good trade for me. Last but not least on the failed follow through is WINT, W-I-N-T. Fantastic opportunity on Friday. I was actually short off the morning strength, but it held, and the fact that it did not want to break those 250s, was an alarm to me. And so you saw I covered, I was fully out. And the goal was hopefully it squeezes out all those that were stubborn, all those that didn't recognize that, look, 250s, 254, 255 was basing. They were soaking everything that came under that level. So they went right up to the 320s, 330s. We had a nice stuff move, and you can see the volume associated with this stuff move right here, and reacted to that, and that was the trade of the day. Not the trade of the day. I guess there was some other ones, but that was the trade of the day on WINT. That was where I sized in, as you saw in the room, and just a fantastic opportunity. For the next part of scan, that is the continuation trades. Those are the ones that I'm looking more big picture. So ones that potentially will continue to break out, charts that I like. There's a bunch of other ones that I have on watch for price alerts that could potentially set up, but the main ones are, as usual, Playboy, PLBY has been setting up pretty well. I like the fact that it's still got that negative sentiment. It is holding on overall. And each time that it kind of starts to break out, it has a weak close. So it's starting to train people to not trust the breakouts, and ideally, actually it's training people to short the breakouts because it always kind of fades off. And ideally one time, again, it may not, but ideally one time it ends up catching and then just doesn't turn back and it just keeps on going. So that would be the goal. And if we did have a nice breakout day, I would expect it to be pretty nice. LODE started in on Friday. Nice trend join, higher the better for this type of breakout. I probably won't scale into this trade. It's more of like a PFMT type trade that you guys saw, rail type, more of like a just get on the right side, let it work until it doesn't. And then last but not least, APM was a nice one, a thinner name, but same kind of concept that we've been talking about, bigger volume trade on the daily, starts to rotate the volume and then starts to break out. So ideally, I'd be able to scale into this trade if it starts to really pick up on the volume side of things. But for now, start a position, one ad, let it work until it doesn't work. That's all that I'm getting prepared for the week ahead. Again, it's always about condensing that watch list and really only zoning into what you're best at. Make sure it fits into a category. Make sure that every single trade that you are looking at, you know what type of category that it fits into. If it does not, you don't have a trade. If it's a failed follow through momentum, you know what that name should do. You know what you need to see in order to confirm that breakdown. Continuation, main watches, whatever the case may be, it's no different. Make sure you have a game plan before you go into the trade. Make sure you have proper risk. And that's it. Have a good rest of the weekend, guys, and we'll see you on Monday.